The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we take a look at Monday's trade actions, soybeans were double digits higher on the day. Corn and wheat, though, pretty much quiet around unchanged, slightly in the green. Livestock trade, cattle found a little bit of recovery support, mainly in live cattle after Friday's big sell-off tied to the news that the Trump administration is rolling out a plan here, we presume soon, about lowering beef prices. We're going to talk about all this and more here today on Market Talk. Joining us for analysis, John Heimberg with Total Farm Marketing. John, hope you had a great weekend. Let's start the livestock trade. I want to get your thoughts on the moves in the cattle market here the last couple of days. As I mentioned, obviously Friday, cattle took it on the chin. All the talk of this rumor and this plan to lower beef prices, and now getting some more confirmation that it sounds like it's going to be tied to some imports of Argentinian beef. I'm already seeing the negative pushback from cattle groups, things of that nature. From a market perspective, saw a little bit of a rebound in cattle prices on Monday. What's your take on some of the impact here in the cattle markets?
Yeah, I don't think that new headline came as any news shock, though. It's as much as we've been doing with Argentina. I know I talked to my cattle producers and sent information out, what was the plan. I kind of put that in there. It's like, don't be surprised we get something announced about Argentina beef, just because we got that extended tariff on Brazilian beef. A lot of Brazilian beef is going to China right now versus U.S. shores. Argentina's got their own beef supply. We've, like I said, kind of become big brother a little bit to Argentina here. So that didn't surprise me at all. Now, the biggest thing is, what's the impact going to be? Now, first off, we're not talking quality beef, but more likely coming in terms of, for the higher end retail trade, it's going to be stuff to supply that ground beef side of the equation or the trim side of the equation, helping out that lower end consumer. I think that's where the most concern is. We're still in a window here. Cash trade was good this week. We're also in a window where seasonally beef demand can climb, led by the rib price with Christmas just over 60 days away. So I'm a little optimistic that, this could be more of a deferred contract type issue. We saw that weakness in the back end on the feeder market today, as well as a little bit softer and bull spreading in that live cattle market. So we'll have to kind of see how it plays out. Now, today's price action, after as difficult a day we had on Friday, just felt very consolidated in terms of trade. Makes me a little cautious that we got a little bit more room to fall. This might have been one of those days some people woke up with some margin calls and just said, I need to get out of the cattle market. So we'll have to see. Now, what am I thinking? We just kind of broke out a pretty good trend line. It's around 239 or so on that December contract. Wouldn't be shocked we go back and make sure that's a good breakout point. I still like this cattle market going forward, at least between now and the end of the year, because the numbers aren't changing. The feeder cattle from Mexico aren't coming. Any beef movement from product side from Argentina is going to take time to get here. So again, to me, a weakness spot here might provide some opportunity if you've made some sales, put some calls out there in December, see what's good, try to capture some upside, because the cash market and the retail market's decent day there as well today are still going to be supportive of the futures market.
I think with everything here, and I'm no expert on this whole situation, but I think it just brings us back to the point of, in the cattle complex, reassessing your risk management strategy here, whatever it is, whatever price points you're at, et cetera, just making sure you have a plan, because as we've seen, something like news, at the end of last week can just torpedo a market. And so it's about managing your risk, John.
Yeah, it is. And again, still having positions underneath just because, we actually had a pretty good opportunity. I think I talked about it last week's show. We flipped the basis around. We had futures over cash, and that turned into put buying territory, because that's really all we did was take that basis back out. And now we're back, maybe $1 or $2 under cash on that December contract. when you get those premiums and then you buy puts, I mean, I was buying puts at the level of last week or this week's cash trade, on Thursday. So it worked out very nicely for producers in that regard. And I've got a pretty good floor in at the cash market, and the futures made the move. So, you got to just keep things underneath this market here. Again, I know option volatility is high and prices are high longer term, but you can see how quick this could turn. And like I said, maybe we're done here. We're finding our footing. I got a hunch we got one more push coming at us. And again, that's $3-4 down before we truly see some good test of some support levels, that were underneath over top this market here just recently. So, but, stay active, keep some type of coverage in, and just keep protection in here. Again, the packers the producers in the cattle market, with the investment you put into feeders, those margins can disappear really quickly if this live cattle market doesn't find any footing.
How about the hog complex? Impacts or no impacts here from what's going on in the cattle trade? It was a quiet day Monday. Some of the deferreds had some green there. What's your feeling with this hog trade right now, John?
A lot of it, I think, is money flow right now. The funds are record long right before the government shutdown. They've continued to push that the front end of this market down. Do you think December's looking at possibly a test that 200-day moving average around 80? Then I think we're going to get a little undervalued there again. Cash market, or at least cash index, is still well above December futures, but it's been trending softer. Losing another 47 cents here today. So that's a concern point. Retail values, they're okay. We're not exactly lighting it up, but again, we should see some boost going into the holiday season here in terms of some pork retail values. I'm just kind of seeing where we get to the bottom of this thing technically, and then I think there's some value back on this board, whether in February or December hogs, just given the hog numbers that we saw in the latest quarterly hogs and pigs report, as well as just where this cash market is. Now that retail index is on its way to pushing well over $10 drop since the 1st of October. I think that's just been one of the reasons we've seen the technical sell-off in the December front-end hog market. After that record long position here, we push back in the middle of September.
How about that dairy complex? I'll ask you about that since we're still on the proteins, and then we'll go over and talk some grains. Looked like kind of a mixed board on Monday to some degree. Anything stand out to you in the dairy trade this week, John?
No, we've actually had a nice little trend in cheese last week. Got a couple another pennies or so out of it today in the block price. Saw a nice pop in that November contract. Some of it was probably because it was so low compared to where October was. Needed to catch up with October getting close to finishing its delivery month here. So that was a nice move. Been having it on with a couple producers. Do we just lock September in here at $17 and just make sure we got it covered? Or excuse me, November, not September. Sorry, and get just things covered. I got some targets out there. I'd like to see some more 17s on the board. Just the biggest problem right now continues to be just the number of cows, the production. We've seen prices on the global scale with global trade index kind of trend lower as well. So it's going to be a little difficult for this market to find some footing right now unless we start seeing some cow numbers come down. But with lower feed costs overall, producers are not afraid to keep a couple extra animals around and try to push some of those margins. But again, this market's been pretty beat up. We'll see. We rallied here quickly off those lows, already tracing almost $1 off that November low here from just last week. Might be getting a little rich here. It makes that a good place to maybe lock some milk in.
All right, John, let's go over to the grains. Let's start our conversation there with soybeans. I mean, we were double digits higher to start the week on Monday, really up about 12, 13 cents here in many of these front month contracts, yet quarter wheat didn't really follow along. So what gives with soybeans to start the week? Anything you're seeing?
Obviously, the biggest thing out there is the optimism that something may be coming together with China. Maybe they've already been in the market buying and we just don't know it because of the government shutdown. Back in 2018, they were buyers of soybeans, and then the government waived or reimbursed those companies the tariff back because they bought them for the government reserves. So that might be something we could still see happening here if there's some type of deal. President Trump made some very optimistic comments about having a deal by the end of the month. I think that's some of the support we see in beans. Then just on top of it, I think farmers are not selling. I mean, obviously there's not a lot of meat on the bone here, if any. For most producers, they got beans relatively harvest. Expectations if we had crop progress was going to be about 80% complete. So we're kind of in those last legs of harvest. Producers have had to move what they had to move, and now they've stuck things in every nook, cranny, and corner to hide beans until prices come up. You saw that article or the news flash from ADM at Decatur. They're offering free DP on a positive basis. Now it's an area that usually we have pretty good demand around that area with usage. So not a surprise there, but I think it's just indicative again of just producers aren't selling, and end users, especially crushers, are going to want to make sure they start securing some bean supplies here in case that yield falls apart or in case China decides to buy some beans.
John Heimberg with Total Farm Marketing is our guest analyst here today on Market Talk. And, you think about soybeans, and you mentioned the ADM story and more. And I take a look at the basis and some of the bids that are out there. I mean, you're starting to see some low tens, kind of around St. Louis, the river bids. You're getting some nines, some high nines out there along, the river up through parts of Iowa, et cetera, and into parts of Iowa. But you still got eights in the Dakotas, of course. I mean, it's a regional thing right now when it comes to basis on the soy side here. And if there is some sort of opportunity for producers to sell, John.
Yeah, there may be here, or maybe lock in some future basis or something along those lines. But, one thing too, export inspections today, we still are getting those numbers, 50 million bushels of beans. That's a nice jump up from where we were even last week. Again, this is the window we are supposed to be shipping beans in. The only disappointing side is we're about 3 million plus metric tons below last year in this time window in terms of bean shipments. So, but I do think that part of it is also playing. Also, never seeing more activity out of the Gulf. We need to get beans down there. That's why we're getting the bid up the river. And again, those processors or those elevators along the river are just making sure they get supplies secured. Again, I just think the farmer is not selling. I continue to hear pretty decent bean yields. Still not blowing the doors off here, but that 52 number, 51 and a half, somewhere in that area, I still think is going to be a number we might walk to at the end of this thing in terms of final bean yield. So that's not down a lot from where we started this. Still the big factor is only 80 million acres. That just really keeps this market a little bit tight on supply. And if we did find some extra demand, you're going to see sentiment just pop this market quickly. But then let's look at South America. Planning's off to a decent start. Weather looks more relatively friendly. Again, South America is so huge. They're going to have dry pockets. They're going to have wet pockets. From top to bottom, we focus our weather, west to east. They're more north to south in terms of how weather scales out. So for them, what they anticipated, 175, 178 million metric ton crop, for have crop failure would be, pretty hard and still not have a pretty good sized pile of beans, capable of last year's numbers around 160.
Quart of wheat, pretty quiet on Monday. Not a lot to chew on there, and it just feels like those markets are waiting on the next story or the next bit of information that we maybe get, whether we get the government reopen and get reports or whatever the case is. I mean, quart of wheat just feel like they're chopping and churning around here a bit, John.
Yeah, they are. Today was a fairly quiet day, 4.5 cent training range on December, and honestly, I think the strength in beans at least kept corn supported. But we had a good week last year, finishing with a strong week, actually an outside week. In other words, trading over last week's highs and lows. So those are some bullish indicators. The other side of it too, again, guys are harvesting now. They're going to sell what they have to sell. But again, they're going to find storage for this and try to make this price come back up. They know there's good demand. Look at export inspections today. I mean, we're at 68 million bushels already for the marketing year on export inspections. That's up 61% already over last year. So there's some movement and demand in that regard. I think that keeps this market optimistic. And again, just the thought that this yield is not there. A lot of things are going to shake out when we start getting some government information. Where do they move demand to? Where's the yields at? Unfortunately, now we're at the 20th of October. It doesn't sound like anything's going to happen with this shutdown. That's probably going to put the November WASDE report, supply demand report, quickly to the back burner. And, that might be a risk of getting canceled here as well. So again, that keeps the information blindness still going. And I think that's something this market could be interested in. Again, with that too, watch the spreads. What are they telling us? Today we kind of tried to bull spread the market again a little bit. Saw some correction on those bull spreads on Friday. But, December, March over the deferred contracts, just again showing us maybe some tightness, lack of farmers selling, a little more bid from the processor here to secure some supplies. If those spreads start pushing out again and narrowing the carry, that just tells you that there's some front end demand here in this market.
John, good thoughts as always. Anything final you would mention or reiterate to folks today?
Again, just stay kind of balanced in your marketing plan. Stay active. I know you're busy out there and obviously pushing, getting acres covered here in terms of harvest. But just make sure you're reaching out with somebody like myself or your elevator. Make sure you know what's going on. Just stay on top of the news, because this news cycle, things can change quickly. I'm working both sides of the coin. It depends on the producer. If they got bushels they're holding, we've been picking up some cheap puts just to make sure we got unlimited upside with the flora, reward. We're at the top end of the range here at this time frame. If we break out, great. We got a few pennies on the risk on the put side, but wide open upside with our bushels. If they've made sales, again, same thing for both corn and soybeans, keeping some ownership in the game, because what if that yield for corn does really fall apart, or all of a sudden China comes in and buys a slug of beans? You're going to be disappointed you pulled the trigger at $10 cash if you had to, that type of window. So just stay active in your marketing and stay balanced. That's the key here in this window, but obviously keep information in front of you the best you can.
John, if folks want to reach out, have a conversation with you there at Total Farm Marketing, what's the best way?
Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget the website, totalfarmmarketing.com.
John Heimberg, Total Farm Marketing. Always good to talk with you. Thanks for joining us again this week on Market Talk. Have a good one. We'll talk to you next week.
Sounds great. Have a good week, everyone.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.